Hey, welcome back to Beyond Business Insurance, the channel that's going to help you be a better buyer of your business insurance. Click subscribe below. All right, you're with a non-standard insurance company or E&S company, excess and surplus lines. Is this a bad thing for your business? First of all, depending on what type of business that you're in, or if you're maybe a startup, you might not be able to get insurance through a standard market and have to go through the non-standard lines. So there might be nothing you can do about this. Also, typically most agents, if they have the ability to put you with a standard market, they're supposed to do that. Now, there is some circumstances where if the cost is way less to go non-standard, maybe that would make sense. But today I want to address 5 key differences between standard and non-standard markets that will help put your mind at ease a little bit if you're with a non-standard market. Okay, the first difference is that standard markets have, they're usually auditable fully, up and down. So at the end of the year, the insurance carrier is going to come in there and say, we were using $10,000 of payroll. You did 20, you owe us more. Or you only did 5, we're going to give you money back. In a non-standard policy, typically there's a lot of different variances here on an audit side of things. I've seen one-way audits where it says, hey, if you do more than you forecasted, you're going to pay more. But if you do less, you get no money back. Or maybe we'll give you up to 10% back, but if you do more, there's no cap on that in terms of what we can audit and charge you for. Or there's also non-auditable policies, which can be awesome. If you have an awesome year, you don't have to pay any more. But if you have a bad year, you don't get any more money back. So that's a non-auditable policy. So you don't see those on standard forms or with standard companies. Okay, the second difference is taxes and fees. Standard insurance companies do not have taxes and fees. Non-standard or E&S insurance companies will have taxes and fees. Those will always be disclosed to you on a line-by-line item so you can see your total cost, your premium, plus your taxes and fees. Third difference is standard paper usually does not have a minimum earned premium. A non-standard market will typically have about a 25%. So if you want to cancel, you can cancel anytime, but if you're not 25% of the way through your policy period, you might owe some additional money. Now, if you're past that, you get your money back, but non-standard will have that 25%. The standard paper is backed by a state guarantee fund, right? So the state will basically say, if this insurance company for some reason goes bankrupt, can't pay their claims, we will step in and help pay claims. I don't know if this has ever happened. I think I've heard from someone that it maybe happened once in the last 30 years. But again, it's rare. Non-standard paper is not backed by the state guarantee fund. So if this happened, you could be, out of luck, right? Now, again, this is very rare, and this is why financial ratings is important. You probably don't want to work with a non-standard carrier that has a financial rating of less than A, maybe A-. If you start to get in the Bs, that should raise a red flag. And the last point is I want to drive home is the flexibility in terms of coverages and variances. Standard policy is more regulated by the state. Their coverage forms are more standard. A non-standard insurance company has way more variances and nuances to their coverage forms, endorsements, exclusions, things they can give back, enhance, that you just can't get in a standard policy. So it's not necessarily a bad thing, but you really got to be careful when you're looking at the list of exclusions and endorsements and how they change wording. That's why you want an agent who knows what they're doing. Okay, so these are the 5 differences between standard and non-standard. Don't get freaked out if you have to be in a non-standard market. I have several businesses that I know that are in non-standard markets. They're very happy. They're happy with the insurance company. Doesn't mean you're going to get less service, etc. It could mean that, but it doesn't have to mean that. So these are just the 5 biggest things that I've noticed, and I thought I would share with you. If you've liked this, hit subscribe, and thank you for watching.